This is another episode of me documenting the day-to-day process that I am taking to achieve long-term consistency in the financial markets. And today, I finally had a day. So I went 4 straight days without taking any trades, and today, finally, the market gave me my trade model, which it did the last 3 days. But today, I was finally able to execute on it because I held conviction in what I was looking for, and that made all the difference. Yesterday, it was there. Yesterday, I knew what the market was drawing for, but I lacked conviction in that idea, which made me uncomfortable with being a part of that move, which didn't allow me to time that reversal. Today, everything is there. I have clear conviction in one level. The market's probably going to go to this level, and I can clearly trade in that direction because I have confirmation across all the time frames. So let's break it down. So before we break it down, I want to talk about what I think profitable trading actually looks like, because I took one trade today and this basically put me at break even for the entire month. This is the 3rd week of July now. It's the 2nd day of that 3rd week. I've had how many losing trades? 4 losing trades, 1 winning trade. 1 winning trade puts me at basically break even, but I have a lot of days this month where I didn't do anything at all. So what profitable trading actually looks like to me, and for me at least, is doing a lot less, which is basically what I did last month. And that's what allowed me to have a good month last month as well. So you can see last month, I had a lot of losing days, right? Not very many winning days, but on the days that I win a lot more than what I lose. On the days that I lose, I'm only losing about 1 times what I risked. So sound risk management, less trading, and selecting high probability setups, which is kind of what I'm working on right now, because I have a model, but I need to get comfortable executing on that. So go to the daily notebook. Today is Tuesday, July 15th, 2025. I had 1 trade, 1 short, and it was a win. So what was my pre-market game plan? Today my bias was bullish, which was actually incorrect, and I'll explain why. Because the market has left the daily consolidation range with strength in the overnight session, it made a new all-time high, so it's likely to continue pressing in that direction. But at the same time, I noticed the potential for a sell, and I just realized I'm in the way. Now I'm not. Okay, here we go. The market looks like it's setting up an ideal sell day, but given this environment where price is at all-time highs that likely won't deliver, I see a strong down candle on the 1 hour supporting price more. So what was I looking for and why? I was looking for a bullish premium gap opening, which is basically my model, one of the setups that I look for. Because of the strength in the overnight session leaving the daily consolidation range, I'm noting this range. I would like to see market open at/near the high day and drop initially to take London pre-market lows, rebalance the inefficient portions of the price swing, and keep trading higher. And because that I potentially saw a sell day setting up, I say I would also not be against the idea of fading the market if it opens at/near the high day and shows me clear signs of weakness. Why? Because of how this daily profile is set up and what I've learned through backtesting and developing a model, this tends to lead to a sell day. We can see we have smooth sell-side liquidity in the Asian session. Market presses up. And then look what happens in the London and pre-market session. This is what made it really obvious for me. Because here we have a London low, right? 3 o'clock in the morning, heart of the London session. And then pre-market, what do we see? The market trades down, but it does not take the London low. So that builds relative equal lows. That's what I aim for when I trade. I'm aiming for a level of liquidity like this, where the market is relatively equal, and I know that there's going to be sell stops underneath that level. I know that's what the market wants to reach for, but first it has to give me confirmation that it's going to be weak and I should sell it up here. So on the 15-minute, I'm telling myself this looks like it's setting up a sell day, but it's not the right market environment. Because in the past, I had a previous trading day where all the criteria for my bearish premium gap opening setup was there, which is basically where I'm just fading the market at the open. But it didn't work out because the market was at all-time highs. But today it does deliver. Today it does deliver because everything on the 15-minute and even on the hourly as well is telling me that the market is not really as strong as it seems, and it should be sold. So from what I've noticed, where I tend to go wrong in bias, and this is why I got my bias wrong today, I typically make biases that are incorrect when that bias is based off of overnight price action that makes the market seem seemingly weak or strong. Now, sometimes we can have those all-day trend days where the market is just on a tear lower or higher, starting right from the overnight session. But for the most part, the market goes against what happened in the overnight session. So most of my incorrect biases come when it's based off of overnight price action that makes the market seem strong or weak. In this case, my bias was framed off of this in the Asia session at 9 o'clock Eastern Standard Time. We have this huge up candle. So that makes me think the market is bullish because it left this daily consolidation range. And because the market's at all-time highs, I'm just thinking it's just going to keep going higher. Now, another thing that was wrong about my bias today, my bullish bias, was it was just simply based on the fact that the market is at all-time highs. So it's just the market's at all-time highs, I'm going to look to be a buyer. That's not necessarily valid. There has to be something that's actually there, present in the chart, setting up to tell me that this is probably going to be a good buy day. That wasn't there today. In fact, it was telling me to look to be a seller because everything that's setting up in the chart told me this could be a sell day. And I knew that. But I committed to the bullish bias simply because market's at all-time highs, and what happened in the overnight session made it seem strong. 2 strikes against a good bias. So that is what made it a bad bias. So looking back at the end of the day, I was able to connect the dots and realize where I went wrong, did that in my market review. But what made me want to sell the market short here was, first of all, we had this huge premium gap opening. We have smooth sell-side liquidity in the Asia session. We have smooth sell-side liquidity in London and pre-market right here, right? Relative equal lows. And then pre-market, this is what's happening. So at 8:30, we had CPI data. Market trades up, takes this high, but closes back inside the range. That's not a sign of strength. A sign of strength is an up candle like this, right? That's going to close over that high and indicate continuation. This is not a sign of strength if it takes that high and closes back inside the range. Then the following candle does the same. Trades up, takes that candle's high, closes back inside the range. Then finally, the 9:15 candle does the same thing. Trades up, takes this candle's high, but it closed back inside the range. So right then and there, as the market is opening at the high day, and I have smooth, obvious sell-side liquidity below, I'm anticipating a drive above this candle's high to fail because the market's opening at the high day. There's smooth sell-side liquidity below, and the close on this candle tells me that the market is not strong. Tells me it is bearish, it is weak, and it should be sold. So now I just have to have confirmation on the 1 minute time frame to tell me to sell the market there. So on the 1 minute time frame, here's that confirmation. This is what forms the high on the 15-minute time frame. I'm going to put them side by side. It's easier to understand that way. Okay? So this little hump right here, I guess you could call it, where it goes up and goes down. I start to see these large down candles come in. That starts to pique my interest because on the 5 minute does this. We have this large down candle that comes in, but it doesn't really overlap the open price of these up candles. Kind of closes right at it, so I'm not really convinced that the market's going to go lower from there, but this is what warms up the idea to me. I start to see those large down candles come in on the 1 minute, and the market dries above the previous high. And I'm like, okay, this thing could be bearish, could be sold short. I'm going to wait for 9:30 to see what happens. So this candle closed below that high, right? I'm anticipating a drive above this high to fail because it did this, because of where it closed. These are the things that I follow. These are the things that tell me the market is strong or weak. So the market opens and it drives above that high. This is the first thing that it does at 9:30. It drives above that high, but it closed below it. Not only did it close below it, I want to see it close inside this gap. I want to see it trade up above that high, but close back inside this gap to tell me that the market is weak and should be sold. So the fact that it drove above that high, but still closed much lower inside this gap right here, that is weak. That is exceptionally weak. It leaves this large premium wick. And now at that point, I'm just waiting for a large down candle to come in, overlap this up candle, and I can sell this up candle short and target that smooth, obvious liquidity from the London and pre-market session. Now this level is so clear, it's so obvious. I have so much conviction in the market going there that I literally feel emotionless this entire trade. So I'll pull up the executions here. Go to the 1 minute. So I'm selling short on that up candle, right? As soon as this large down candle comes in, boom, closes over the open price of that. I set a limit order right there. See where my entry was exactly. Let me change this real quick. Put these on. There we go. Okay. It's a 5 minute, drop to 1 minute. It's not showing up. Great. Thanks, TradeZella. Let me reload the page real quick. love TradeZilla, but there's always just so many different bugs like this. All right, cool. It's not going to show the execution, but I sold short right in there. So that's the trade for today. Now, a big difference between today and yesterday that I noted, let's compare it in the daily notebook. Yesterday, what did I miss? I missed the move I was looking for because I didn't approach price with conviction in my bullish bias, okay? Let's go to today. What did I get? I got the sell I was looking for. Why? I didn't miss anything. I was able to be a part of it this time only because I held conviction in my bias. So it's extremely important that I do this process, this daily process of filling out this template of everything that I need to record data from pre-market so I know what I was looking for before the market opened, what is my bias, what setup am I looking for and why, annotating all the charts from the weekly down to the 15-minute at least, and then live trading, what was I thinking intraday? Today I didn't mark anything because the move happened right at the bell, so there really was no time for me to check in with myself and ask myself what I was thinking. And then after the market closes or after my session is over, it's important that I do a reflection and ask myself, how did I feel going into today? Because that can definitely affect that can definitely affect my decision making intraday, right? What rules did I break and follow? What did I learn from that session? The most important part. What did I do wrong and what did I do right? And then after the market closes, I'm going to ask myself, I'm going to review like how did I approach the market and was that correct versus what actually happened. So this is how I approached the market. My approach was not correct because it was based on overnight price action that makes the market seemingly strong, not the things I look for to frame a bias. So the things that I look for to frame a bias are, number one, where the candles close, right? That tells me if the market is strong or weak and should be bought or sold. And number two, where the market is smooth. So the market is smooth right here, right? It's smooth below. It is smooth below, but above the close on these candles tell me that it's weak. So that tells me that I'm going to be seller. I'm going to look for a gap fill when the market has this huge premium gap opening. That's my bearish premium gap opening setup. So was my approach correct? No. What happened? My approach versus what happened. Compare the two. What did I plan to do and how did I execute on that? I planned to be a buyer when the market delivered obvious pre-market London sell side, but also planned to sell targeting that smooth level. What did I miss and what did I get? And then, of course, after the market is over, you have to go back and annotate your charts top down as you would do pre-market. This is the process that I'm following, and this is what's allowed me to make a lot of progress in a very short period of time. Like I've just been consistently backtesting and literally doing this exact same process even when backtesting. If I go to my backtesting notes, not as in depth, but I'm still doing that, right? So even when I'm backtesting, I'm letting it be known what my bias was, what setup I'm looking for going into that day. And then after the market is closed for that day, even in backtesting, I'm going back and asking myself what was my approach versus what happened and what I learned. So if you do these things, it definitely takes more time than if you were to just go back test and just play each day, day in, day out, and not record anything. That's going to be a lot faster, right? But slow is smooth, and smooth is fast. If you take things slow and if you do things the right way and you follow a process and you know what you're getting out of every single rep, you're extracting a lesson from each rep that you take through live trading sessions and back testing, and you go slow and you correctly follow a process and you're doing your data collection, then you start to learn at a really, really fast pace. And that's what I've been on since June now. I started doing this towards the end of June. Once I came across a video from Umar Ashraf on Chart Fanatics, basically covering the 5 stages of trader development. Now I'm doing this in my live trading and in my back testing, and I've seen a lot of results. And from that, I've been able to build playbooks that I'm studying right now because I've collected enough data. Each day that I go through my daily journal, I tag each day, which like what was my bias going into that day? Was I bearish? Was I bullish? Did I get it correct? Was I bullish? Did I get it incorrect? Was I bearish? Did I get it incorrect? Was I bearish? Did I get it correct? And what setup the market offered for that day? Or was I indecisive on my bias going into 9:30? Or did the market not offer me any setup at all? So I'm marking these things so I can go back and study each day. Trading is data collection. You have to know your data. I'm just now realizing this over two years into my journey, almost 2.5 years into my journey. Still not profitable. I'm realizing the importance of having a process that allows for data collection. because the process is just the template that I basically fill out that allows me to collect data. And then I go back and I study that data and I'm able to connect the dots and know where I went right and where I went wrong. For example, I can tell you everything that I did right today and everything that I did wrong. Like today, I know why my bias was incorrect. Why my bullish bias was incorrect was because it was just framed simply off the idea that the market is strong in the overnight session and we're at all-time highs. And I know from past mistakes and past days where I've also collected lots of data that when I frame a bias based on overnight price action that makes the market seem strong or weak, it's typically incorrect. And when I frame a bias that's bullish just because the market's at all-time highs and not what's actually setting up in the charts in that daily range, it's typically incorrect. So it's a lot of work that has to be done, but that work gets you where you want to be faster. So I'm just doing this consistently, and I know that, things are really starting to fall into line for me. Things are really starting to click. Like these days, my model was there. I wasn't able to be a part of it, and I just walked away. The market literally delivered everything that I was looking for, and once it did that, I walked away without ever being a part of it, without even doing anything. That's something that I would never see myself doing, not even like 4 months ago. If some shit like that happened 4 months ago, I'd probably stick around till last month even. That's literally what I struggled with all last month. The market would give me what I was looking for. I wasn't able to be a part of it, so then I just stick around and look to literally fade the move that I originally planned for, but I just couldn't be a part of. Now that's happening, but I'm just walking away because I know that it's going to be there again. So as you just continue to grow, you continue to develop like new levels of maturity, and you realize all the things that you do that hurt yourself and hold yourself back, and you're able to avoid those. So the trading journey is a beautiful thing. It's long, it's a slow grind, but once things start to fall into place, like you can actually feel it. You can feel that you're close, and that's kind of what I feel right now, because I have the model, I have the process for data collection. I'm able to connect the dots. We're moving forward at a very fast pace, and it just feels really good. So I think that's gonna be it for this one. Till tomorrow.